Oh, we were waiting on Chegg to report these earnings. Woohoo! And it's down nearly 5% after hours. We'll take a look at these earnings and see what's going on with Chegg. Why are you feeling the blues after hours? What is going on that investors are selling the stock off? Well, I say we pop right on into these numbers and see what we have going for us. So from a non-GAAP EPS standpoint, they placed a 17-cent number, which beats by 7 cents. But a GAAP EPS of negative 29 cents missed by 9 cents. And it's honestly quite a big miss in terms of profitability, I have to be honest with you. So I do believe there is room for some concern in that aspect, obviously. But again, you talk about improvement year over year, and I think that's what matters more for this company. But you'd like to see a little better of a profit line there. But revenue, though, consistently good. 154 million, which is a up 63% year over year, beat by 10 million. You like to see that. I mean, that's good numbers. And again, at these lower values, I mean, it's easier to grow by a higher percentage. So take that 63% with a grain of salt. Where, a big corporation like Walmart growing by 154 million is the equivalent of 0.01%. You know what I mean? Sorry, that's rude of me. 0.1%. Sorry for being rude. Chegg service subscribers were 3.7 versus a consensus of 3.61 million. So good stuff there. I can't argue with them. So we do have slides to look at, a little bit of slides. Then obviously we'll look at the financial information as well. Look at this. A smarter way to student. Student is not, in fact, a verb. So I really dislike that, unfortunately, due to really just grammar there. So obviously, as far as in highlights here, they're going to mention this is the leading direct-to-student connected learning platform. They've got a large addressable market with compelling market trends, high growth and high margin model, and a high moat. Well, if they had a high margin model, and well, maybe it's a model, they just haven't fulfilled it yet. I was gonna say, what's with that? What's that profit line? You know what I'm saying? Where's that at? That's all I'm asking for. They've got a competitive moat given brand, reach, data, and proprietary content. So again, you talk about subscribers, 3.9 million Chegg subscribers. Chegg service subscriber growth was 29% year over year. Big stuff. 15 million Chegg platform unique visitors in an average month. Good stuff. Services year over year revenue is up 31%. Adjusted margin was 30%. And it's voted Fortune's best small and medium workplaces, best workplaces in technology, and best workplaces for parents. I mean, that's something to consider, I guess. Pretty interesting there. So as far as highlights, they're mentioning 3.7 million Chegg services subscribers, which is up 69. Woo! 69% year over year. It's not funny. I was just joking with you. I'm not a child, as much as you might think I am. Total revenue of 154 million is up 64% year over year, and 252 Chegg study content views. Pretty massive numbers, and you see just what this company can really do if we talk about the future in terms of growth. I mean, they have the potential there with the people that use the platform for sure, and you're going to see those numbers continue to rise. So yeah, absolutely, it's pretty nice stuff. For Chegg, they're putting up some good numbers. So again, as they mentioned, today's learners faced more pressure than ever. I don't think that's a denial at all. I think everything in total, the current market is crazy, but this isn't necessarily focused on just the learning environment, as is with a lot of online now, but it's focused more in general as far as higher education. So, but we will see some of the data they give. So overall, they're saying the average student age is 25 right now, and around 40% are employed. I must say, I fit this criteria solely really based off of the employed part of it. A little bit lower than the average student age, but still. Relative cost, 37% don't graduate, maybe try harder in school. That's rude. That's rude. 30,000 debt owed by 2018 graduates on average. It's crazy. And 41% of recent graduates are unemployed. Crazy stuff. As far as the market opportunity, there are 36 million U.S. and university high school students. U.S. university and high school students. That's a lot of people. And 18 million in Canada, Australia, and the U.K. secondary and tertiary students. So, again, that's a big, big potential market there. Overall, the total potential market they mentioned is a potential 102 million students that can benefit from Chegg. That's crazy. 48 million are going to be English language instruction as a medium, which is going to be people obviously learning English as a second language. Could be very useful for sure. But I mean, out of this, they've got 3.9 million, and they say a total addressable market of 102 million potential. I mean, that's quite a big potential. I mean, you're talking about doing 25 times the amount of revenue that they're doing right now, potentially, as far as that's concerned. If they reach their total addressable market, debatable. We'll see how that goes. So again, 87% of college students have heard of Chegg services. It's valid. I mean, I heard of Chegg through high school, really. I've never partaken in the service because I haven't needed it, thankfully. But again, it's a good service for people. For the most part, people that use Chegg, it's really mostly math, but they mention the whole STEM category. But math is usually the subject most tutored. If you just talk about overall tutoring in general, math is typically the one that needs the most help. So their integrated platform includes Chegg Study, Writing, and Math Solver, which helps you give you step-by-step instructions on how to solve math problems, and this is all included in the Chegg Study Pack. And obviously 24/7 Chegg Students, pretty massive too. You're also able to rent or buy e-textbooks here, which is crazy, which I think is pretty awesome as a whole too. The ability to rent or buy textbooks or e-textbooks is pretty crazy, because you think about the market right now and how you necessarily buy books. A lot of people would do the stupid route, and I hate to say this, of buying from their bookstore at their college, which is a horrible idea, by the way. You've never wasted more money in your life if you've done that. I mean, you're paying easily 1.5 times. I mean, at a minimum 1.5 times what you should for the book, even for rental. So, a service like Chegg saves you a little bit of money, and especially with online right now, where people aren't going to the physical school bookstore potentially. They see benefit from that. But obviously, Chegg gets good grades. Obviously, people enjoy Chegg. So overall, in the past 5 years, they've got a annualized growth rate of 40% on Chegg services. Pretty nice to see. And supposedly by the end of the year, they'll be hitting $508 million total dollars in terms of sales, and that's a good growth chart. And you see a lot of good stuff going on here. And service subscribers, you see really good stuff there too, really growing out quite a bit. As far as the outlook is concerned, you're seeing potential full year guidance. That's including next quarter. Next quarter, they're expecting 188 million to 190 million. Good stuff there. Services revenue of 162 to 164, which is a lot bigger than this quarter. Again, you need to mention that too. There's a big difference here, because quarter 3 for them is really the summer quarter for the most part, so they don't get a lot of business at the start of the year. Quarter 4 is full on school quarter. I mean, it's full on school, and that's why you see a lot of much bigger difference in terms of the revenue. Gross margin 72 to 73%. Their adjusted EBITDA of 82 million to 84 million. A lot better than this year as well, expected. Pretty crazy. For 2021, they're expecting a full year of 775 against this year, expecting 626 to 628. So big stuff, and expecting 29% year-over-year growth in service revenue and gross margin of 70%, which is pretty big. You can see some really good numbers from them as far as that profit line is concerned, potentially. Now we look into, obviously, the balance sheet, as we must. We start off with just the total current assets here as we highlight. I get a comparison of 9 months, which I do like. 1.3 million right now or 1.3 billion in terms of total current assets versus 800 million of 9 months ago. So good improvement there. Total assets in general of 2.3 versus 1.48. So really good improvement there as well, around 100 or 800,000 or 800 million, I should say. $800 million improvement there in terms of total assets. My concern obviously is liability. Might have seen the same thing. We'll take a look. Total current liabilities of 142 or 143 really, 143 million versus 71 million. You see that nearly double. Overall, though, total current assets went up by a lot more than total current liabilities, and total assets in general, our total liabilities is at 1.7 versus 990 million. So all things considered, it only rose really by 700 million, close to there, compared to the assets rising around 800 million. So total stockholder equity actually saw a rise, 645 million versus 498 million of 9 months ago. So actually improvement in the balance sheet for sure. And you see as profit potentially, comes into effect, I'd like to see what this company can do. Very excited. I really don't like the valuation of this company. I think it's an egregious valuation. But what can I say? And I think part of this egregious valuation is the fact that on the year, it's up 122%. I mean, that's part of it. I'd much rather like this thing at the $40 range, and I think it's a little bit overvalued, so I'm not going to be buying. But if you bought, I get it. I just don't think it's worth it. But I hope you have a good day.